Well, good morning. I've got my trusted partner here, Mr. Krzysztof. How are you doing today?
Good morning, boss. Rise and shine. Happy Friday, April 5th to you.
Yeah, I can't believe it's already April, man. I mean, the first quarter flew by. It's just extraordinary. Although the first quarter flew by, the monkey business in the market continues. But one of the things I wanted to talk about was what happened yesterday in the afternoon with the FOMC. And the market all of a sudden just dove. Um, and there are two schools of thought. One of them is the news coming out of the Middle East, the United Arab Emirates saying that they're going to cut off communication and relationship with Israel. And that seemed to happen right at the same time that Kashari who's not even a voting member from the FOMC, came out and said maybe there won't be any cuts. And so that sort of added the fire to the move down in the market. I mean, I've been saying since last September, and then I grew more um, uh, not concerned, but I would say I grew more confident that the Fed had painted itself into a corner. If they cut rates, okay, it's going to spark more inflation. And we already have inflation. So if they cut rates, they spark inflation, which is exactly the opposite of what they say they want to do. If they don't cut rates, then the markets gets very upset and could, go down even further. So the Fed has painted himself in a very tight corner. One of the things is Powell has been pretty good about declaring what he's going to do and then doing it. So he keeps saying over and over again, I'm going to do three cuts. I'm going to do three cuts. I don't know about you, but I don't believe him. I think the only way we get a cut this year is in deference to the presidential election. I just don't see how he does three cuts, Christoph. I mean, do you see a world in which there is a justification using the Fed's own monetary guidelines and interest rate guidelines where he's going to be able to cut three times this year? Do you?
Well, that's the thing that I was so puzzled by the market's reaction in, what was it, November, as it started climbing higher and higher. Everything was in anticipation of the cuts. So that actually made sense, that time frame, called November, December, right? Cuts are coming great. But then as the weeks went by, there was more hot inflation data and all of the complexities that you continuously allude to. And all of a sudden, the cuts were not coming as quickly as forecasted, but the market still continued going higher. That kind of uh, you hear what you want to hear from the market seemed very bizarre to me. And I'd like to add one additional data point for you to comment on, hopefully. In mid December,
Mm-hmm.
oil hit a low of 67. It is now at 87 as we speak.
Mm-hmm.
My understanding, my very simple minded understanding, boss, is that higher oil prices are not great for inflation.
Oh yeah, absolutely. I mean, look at oil. People look at oil as just filling up the car with a tank of gas. But if you look at oil, petroleum products are in everything from building materials to packaging, right? And so they're price of oil, they did a very good job manipulating and keeping the price of oil lower, but it looks like they've lost control, right? And the Biden administration sort of screwed themselves because normally what they would have is the strategic petroleum reserve, where in order to combat, rising price of oil, they could release oil from the SPR. Well, they don't have that ability right now. They were doing that for the past 18 months, and so it won't show up. This is to me a canary in the coal mine, a precursor that if oil continues to stay up at this level, it's going to have a very strong effect on inflation. I don't know what the lead time is, if it's 60 or 90 days out, but most certainly it makes it even more difficult for the Fed to say we're going to cut, right? Because you're exactly right, from 69 to 87 bucks.
That's a big jump in a short time.
Oh yeah, it's a huge jump, and I think that again it speaks to how is the Fed going to cut rates. I mean, the other part, the question I have for you is it's always surprised me that you have non-voting members or even voting members. You know, when I worked for the investment bank, if we went out and we were doing a presentation and uh, I then did a interview where I contradicted the presentation given by my bosses, I wouldn't have a job. And yet these guys are out there immediately contradicting Powell, contradicting each other. So there is that tinfoil hat part of me that says, are these guys doing this on purpose? And of course, I believe they are, right? But Kashari comes out, says, I don't think there's going to be any cuts. Well, I agree with him, but I just it's hard for me to believe that that wasn't intentional, because it's absolutely contradictory what Powell's been saying repeatedly. I mean, what are your thoughts on that?
It's way above my pay grade, boss, because I put this quickly into the too complex bucket.
Hmm.
Uh, Especially in the election year. I have no idea. I really don't. You can interpret all of these games, I suppose, in whichever way you want, and you can
Mm-hmm.
make a case for it, right?
Mm-hmm.
So beats me is my honest answer. But the market certainly got scared.
Oh yeah. Well, I think there was the combination of the Middle East and then Kashari's comments. I think the general market right now is just looking for a reason. It's a very nervous market. It's choppy, right? We're not able to make new highs. We're not really pushing lower. Any headline news report that comes out, they're incredibly focused on interest rates, which again I don't understand why that would be. I mean, look, let's say he cuts, once and you get a quarter point cut. Whoop de doo.
Right.
Right? I mean, what the hell is that going to do for the economy? A big whopping quarter point cut? And yet the market is, completely focused on that. But that speaks to why what I'm saying is the market doesn't have uh, a topic or a thesis to either move higher or lower. The AI revolution here that happened in the fall and winter, that I believe that saved the market from coming down. Okay. But now where AI is sort of yesterday's news, I think the market's sort of searching for, well, what's going to take us higher? What's the next great thing? It's not going to be gold, even though gold stocks have been moving up, which by the way, with gold stocks moving up, that is typically a sign of expected or current inflation, right? Because commodities, hard assets, and precious metals are typically a very good hedge against inflation. So this move up and then you take into account central banks have been buying gold and all of that. Um, the market to me right now is sort of playing. I don't want to believe it, but I believe it's true with inflation.
So is not the 10-year treasury bond rate also a good indicator of what the market is saying? And that is up again today to
Yeah,
about 4.37 at the moment.
yeah, it is. That's a great point. But you and I both know that the level that the market really gets concerned about is that 5 point, that 5 level, right? A 10-year treasury at 5%. And we hit that back in October. And so I don't think the market's going to be as concerned until we get closer to that level. I actually think that the smart traders are looking at the Japanese yen to US dollar because, the Japan central bank has said it's unacceptable for that exchange rate to be above 150, and it's at 151. I mean, they drew the line in the sand.
Yeah, so I was going to ask you about that next. Can you slow down, way down, and explain to our listeners what is it that that number means? So start at
Oh,
the very bottom, right? Right now it's trading at 151.5. What does that mean when you look at that?
okay. So 151.5 means that for every yen or for every dollar, I'm going to get I can get 151.5 yen. Okay. And so if you think about the each country's economy, okay, if when the exchange rate if the exchange rate dropped, meaning it went down to 140, 145, it increases the buying power for the Japanese economy. Okay. With a higher exchange rate, what the Japanese central bank, I believe, is concerned about is it's going to make um, their exports cheaper, right? It's going to allow the U.S. Well, let me pause that back. At the end of the day, the currency exchange rate is directly tied to the um, Treasury refinance market for the U.S. Treasuries. Because think about it this way: the Japanese have stated the 150 is the line in the sand. They don't want their currency to depreciate. So the higher it goes, the lower value that yen has against the dollar. Okay.
Therefore,
So
cheaper exports, like you were
yeah.
saying.
And so they've stated that, and as a side note, Krzysztof, I don't know why they would draw a line in the sand and state it publicly. Okay. I mean, I remember when George Soros collapsed the Bank of England. I mean, the one thing you don't do is you don't pick a fight with currency traders, right? They they'll win. So I think it's directly related though to the treasury financing market because in a way, you've got the Japanese can either decide to take care of their own house or they can continue to help take care of the US's economic house. The Japanese have been the largest buyer of treasury securities. Now, they have to find that money somewhere to buy treasury securities. As their currency gets depreciated, right? When they go to buy dollars or treasuries, they buy less of them, not more. Okay. So I'm looking at it as their focus could be pulled off of this continual nonstop ATM machine helping out the US economy or the US Treasury Department. Um, that and if they put the fiscal focus on supporting the yen, um, you've got one of the largest buyers of treasury securities in a year that we have an enormous record amount of debt that needs to be financed. Your demand will go down, and so that's how I think it's what I look at why it concerns me.
And
That
boss,
150
if
level I
I
think is
could I interject for 1 second, just to double check if this is correct? If the demand for the Japanese government buying U.S. bonds goes down, that means the prices of the U.S. bonds goes down because the demand is lower. Therefore, the interest rates for the bonds goes higher.
yep,
Correct.
yep.
Therefore, it's the opposite of what the Fed is trying to accomplish.
Absolutely right. And think about that. If it's exactly the opposite, also what the Fed has been saying, you know, interest rates going up on a 10-year or any of the, treasury securities is inflationary. They are trying to prevent that. I mean, the the bear wet dream is that Japan decides to actually sell their treasuries to finance the defense of the yen. Now, they did come out in January or February and said they had enough offshore money where they didn't believe they'd have to sell treasury securities. And if you believe that, I don't believe any politician or central banker. At the end of the day, and this is my whole thesis about why I think the market eventually is going to have a hard downturn, especially in the commercial real estate, at the end of the day, some party is going to decide, I'm going to take care of myself first. And that, I think, is going to happen with Japan, right?
And that's the usual way of the world. It's almost one of the things I want to ask you as you were explaining this is it almost seemed like Japan was playing a kind of good Samaritan role, like an altruistic, yeah, we're going to
Yep.
help the US out, which of course doesn't make sense in the financial world of being self-interested. So why have they, in a sense, played nice for this long? It seems like they haven't, right? But there's something I'm not understanding.
Yeah, I've thought through that from a geopolitical standpoint. I was trying to figure out, because Japan is not, it's not like it was in the '80s where they were a large exporter of electronic goods, and you remember in the '80s the issue wasn't made in China, it was made in Japan. And I don't know if for some of our listeners who are younger, in the '80s there was a great concern about the Japanese, that they were buying up all the real estate here, and they were, and that doesn't exist anymore. But we've got military bases there. I do not know why the Japanese central bank has been so, as you said, has been a good Samaritan and has helped finance the U.S. debt. I do know that the levels of refinancing that the Fed has to do a year are beyond what the Japanese can do. Okay, and so I don't know, Krzysztof. It's befuddled me too, because I'm thinking, why are you doing that? Now, there is, maybe they're doing it to protect their own investment too. I mean, they're one of the largest holders of U.S. Treasuries, so they don't want to see the value of their bonds go down. So they don't want to see interest rates pick up either, right? There is, as a side note, there is this belief out there from some well-respected traders that the goal is actually the U.S. wants to collapse the U.S. Treasury market. They want to collapse the value so they can buy it back at a cheaper price. Okay. And that would actually help force people more onto the dollar. I mean, there's a whole thread about it, but yeah, I could see the U.S. government doing that. I could see the Treasury coming out and not publicly stating it, but allowing Treasury values to fall. But in order to do that, they have to let interest rates rise, right? Because that's the only way you get that. The other issue with Japan is they have been the central focus or the major component in the carry trade, right? And the carry trade you hear a lot, which is effectively you borrow against another currency, and you use that spread between the interest rate in Japan and interest rate in the U.S., and you just effectively capture the spread in between. And the market is taken to the next level, as the market does, is so they're borrowing, they're capturing the spread, and then they're leveraging, and they're using that leverage to drive down the VIX or drive down oil. I mean, the Japanese are much more involved in the U.S. currency and interest rate market than I think most people understand. It is, and again, to me, the only thing I can point to is they're protecting their own investment. Because what does Japan owe the U.S.? I mean, what do they owe them? I mean, we don't sell a lot of goods to Japan. We don't sell a lot of weapons to Japan, right? So what is it exactly that? The only thing that I could think is the defense, that being an ally with the U.S., they've got China knocking on their doorstep. Okay.
Mm-hmm.
And that's why I think the Japanese that's the only reason the Japanese have been so willing to be complicit in, helping out the U.S. Treasury market, is they need effectively a bodyguard against China.
Yeah, that makes sense. And this is a lot of complex pieces, and I'm sure there's a lot of unknown unknowns that we don't know about. But is it fair to summarize at this point that the takeaway message here is, for all investors, this is a time where caution is very, very much encouraged or necessary because of all of the pieces seemingly stacked like dominoes.
Yeah, I would absolutely. I would use the analogy of a juggler. You know, over the past 6 months, the markets have had the number of things the market has had to juggle at the same time has grown, and it's a matter of time before they have a misstep. And so the risk, speaking of what you just said, the risk right now is high. Okay, is it going to be interest rates? Is it going to be Middle East? Is it going to be Ukraine? Is it going to be U.S. job market? Is it going to be the U.S., the coming presidential election? There are so many risks to the market right now. Or is it going to be CRE, commercial real estate, right? Is it going to be regional banks? The risk to the market now, the number of things that the market is juggling in order to stay just at this level, okay, has grown significantly. And they're going to drop one of them. It's inevitable. I just don't know when that's going to be. But yeah, right now, if you're an investor, you should be asking yourself. Every investor, I think, should do this on a continual basis. What if scenarios, right? What if the market does this? What if the market does that? So you're not making the decision when it's in the thick of that action and your emotions are involved, right? So I do that constantly. Well, what if the market drops here? What if the market? I don't see a reason. Do you? I don't see a reason for the market to continue to advance except for an interest rate cut.
Right, and even then, it depends on when and what they say about future interest rate cuts. So you're
Well,
right.
I'll make a bottle of what's your scotch, whiskey, whatever you drink. I'll make a bet, and since I don't drink, you can buy me Celsius energy drink. But I'll make you a bet.
That's what we need, boss. We need you even more hopped up.
Yeah, right.
No, you're gonna get a nice carrot, celery, kale concoction. Is what you get.
Okay. I'll make you the bet that if they do drop interest rates, it's going to be a sell the news event. It's going to be a sell the news event. I mean, and what you said, okay, so they drop the rates, but what's their outlook? What if Powell drops the rate and says we're done? I mean, geez, the market's going to have a conniption.
Yeah.
Right? So it's like a little kid. You're trying to take the candy away from the little kid, and the market is the kid, and the candy is the stimulus and interest rates. And the market doesn't want it taken away. So right now, what we're seeing in the market is exactly that type of action, right? Where it's very skittish right now.
So shall we talk about? Can we segue to a specific
Sure.
test
What do you want to
case?
talk about?
This is what I brought to your attention yesterday, and I really loved your explanation. So I think it would benefit a lot of our listeners. So the context here is that I believe in the long-term story of Tesla,
Okay.
but I don't think that's the part. I don't want to debate that piece. Just assume, and for this exercise's sake, let's assume that I'm correct if we give it a long enough span. Arguable, of course, but that's the assumption I'm going with. That sometime, call it in the next 5-10 years, Tesla will be worth a lot more than it is today.
Okay.
I came to you from that position saying, a couple of days ago, Tesla released their delivery numbers, which really underwhelmed the market. Fell short year over year, I think 8% to the negative. It was disappointing in all kinds of ways, and Tesla had some built-in excuses. There was what was it? A factory shutdown due to arson in Berlin. That was a bad quarter for all electric vehicle makers, so on and so forth. That's also sort of besides the point. But the reason that's relevant is that on that news, Tesla shares dropped quite a bit. So most typical long-term buy and hold investors see a big price drop in a company they believe in and say to themselves, okay, now is a good time to add more shares. And I saw this across a lot of Twitter, including some investors I really respect and think they've done very well for themselves. And I brought to you this question. can we look at Tesla's chart
Sure.
and see what it shows you, right? And how you would analyze this from your perspective rather than the immediate, oh, shares are cheaper, so now let's go buy more.
Yeah. So I've got the Tesla chart up. I'm using it monthly, right? And so when I look at this, there's a phrase in the market which is "Don't try to catch a falling knife," right?
Actually, before you go on, can you briefly explain to the listeners what you mean when you say you're looking at monthly?
Sure. So I've pulled up a chart. I'm actually sharing the screen where um, my time frame, my individual periods are months. Okay. So it gives me a 60,000 foot view of Tesla's price chart. I call it the personality of the stock. All right. And so what I also want to know is where is today's price relative to, you know, X time frame previously. And what I notice is on this monthly chart, it should be apparent to anyone is there's a downtrend, right? The other thing I notice is we're right back at the price that it was at in August of 2020. So a long-term holder, okay, went into this stock, and let's say they bought back then in anticipation of, of Cybertruck and increasing deliveries and sales for their Model S and 3. But they're break even right now. They haven't made anything, but at the same time, they've carried almost 3.5 years of time risk. So when I look at that, I'm like, and this was the conversation I remember having is, why would I do that? And more importantly, why would I be a buyer here? What is it other than, as I, not so poetically said, sticking your finger in the wind and taking a guess, why would it be here? Now, because the environment that Tesla went up in is a different environment, business environment, than the current environment. Let's not forget that Tesla survived for many, many years based off of the tax credits they were getting from the US government. Okay. This was before they ever had a car produced. They also didn't have any competition. I mean, they were it. Okay. I mean, Rivian and Lucid and those guys, they're struggling, but they didn't even exist. And the Chinese manufacturers weren't even going into EVs, and you didn't have the major global manufacturers going into EVs either. They have a tremendous amount more competition, and I think their biggest competition is coming out of China. So if I'm looking at Tesla, any stock, if I want to hold something, is it the right time? I mean, we're at 170, 160 right now. Okay. And personally, because I've been asked this, where would you be a buyer of Tesla? $100.
Why? So two questions. What is $100 sounds like a, fat round number, almost like a guess. So that could be it, or maybe there's a technical level at 100 that you see that tells you that specifically is the price. And if I look at my chart,
it's actually January 1st of 2023. So the month of January in 2023, Tesla hit a low of $101.81. That's where I'm getting that number.
Right.
That was the low point. Okay. Over the last 4 years, Tesla went down to. So, and if I look at the monthly, you can definitely see that the angle is down. Tesla stock right now. Look, Tesla was a hot stock. It was, everyone loved it. Those who were, there people were passionate about it, but let's look at what's been going on. I mean, he's being pursued by the Department of Justice, right? There's investigation there. He already lost on the whole compensation issue. They wiped out his compensation. He has incredibly increased competition coming out of China, as well as the global manufacturers. He hasn't released a new model other than Cybertruck, and the Cybertruck, they have quality issues already. People are complaining about it. And so I don't see I see that the path of least resistance is down.
Can I ask you a follow-up on that to go
Sure,
back to the chart, boss?
sure.
Because like you were saying, the monthly chart shows you the personality of the stock.
Hmm.
And so what I'm looking at now is basically a very long, flat tail up to for about, what was it? Call it $15 a share
Hmm.
through January 20.
Hmm.
About April 20, it starts moving up a little bit. But the whole picture, if I look at the whole picture, uh the the price is going up. It went from, call it, 15 to about 160. So let's call that 10x if we include the long tail.
Okay.
But if we look at the high of 414,
Hmm.
that happened in, when was that? 20 When is that high? 21.
Yep.
Then from that point it's down.
Hmm.
So my question to you is, this chart seems to have two personalities. The whole picture still shows up, but half of the picture shows a downtrend. Where do you do you look at the data that is most recent as being more relevant?
Yes. Yes. I think from a from a statistical standpoint, the most recent data is more representative of the price action than older data. In terms of trend, I'm speaking in terms of trend. So, yes, the most recent data is this stock has sold off in the span of, let's see what the date on this one is, July 2023. So, not even a year. This stock has sold off for $300 and it's almost been cut in half. That's a big move.
That is a
Okay.
big move.
That's a big. Now, there are examples of this happening. Apple did the same thing, where Apple traded all the way down to 11, $12, right? And then it went up 10x, 15x, but Apple, the key to Apple was the innovation. They sort of created that whole ecosystem. Whereas I look at a Tesla and I'm like, an electric car is an electric car, right? So, okay. Increased competition. They're having problems with the Department of Justice. Across the board. For me, this is, and I don't want to be flippant about it. For me, this is an easy call. Okay.
Okay.
For the average investor, just think about it this way. When you hear about Tesla, are you hearing generally good things or bad things? Okay, because at the end of the day, stock prices are the representation of the collective human behavior of the investors involved in it. So if I'm looking at the Tesla price chart on a monthly basis, okay, it lines up with the growing negativity, whether it's right or not, that negativity, with the growing negativity surrounding this company.
Right.
Right?
Does anything change for you when you move to the weekly outlook? And and in your mind, what's the difference between the monthly and the weekly?
So monthly gives me the personality. Weekly gives me the trend. Because, as you know, my average trade is about 12 days. So weekly is telling me what the trend is for the, most recent period, 5-6 months back. Okay. Because it's very difficult for a stock to break trend because human beings act in a herd mentality. And if you look at, Tesla on a weekly chart, I got the same thing. It's just going down. You get little spikes here and little dips, but at the end of the day, it's, look, if I had said to you last July, hey, I think Tesla's going to hit 150, January to April of next year, most investors would say, no, that's not going to happen. It's not going to be cut in half. And yet here we are. So those same investors, I think, would say to me now, some of them, it's not going to 100. And yet when I look at the chart, the trend is, oh, it's most definitely pointed to that direction. Now, they could come out with some big, exciting news and reverse that trend, but I'm not seeing it. They said their
Right.
next vehicle is not their new release. Won't be out until 2025.
And the main point there, though, is that if they come out with some positive news, then we would happily then process the news and have the opportunity to buy once the trend has reversed. So being flexible in this way does not condemn us to one direction only, I think is the main strength of what you teach.
Yeah, look, if we're gonna, Tesla was a story stock before they produced anything. It had to be a story stock, right? They didn't have any earnings or revenues, so it was a story stock. Well, what's the story of the stock now today? Would you say that it leans positive, neutral, or negative?
You mean in this very moment?
Yep.
Yeah, I agree with a lot of what you said. There's a lot of doubt. The market hates doubt and uncertainty. We don't know about its pricing power and the effect of competition and so forth. Though I know why I continue to believe it will be the world's most valuable company, and that has to do with its engineering excellence.
Mm-hmm.
That they're creating a moat around how fast and profitably they could build the cars, better cars for cheaper, and eventually the margins will squeeze out the competitors. But that's a ways away.
Mm-hmm.
Although that kind of intangible, I would say, drawing the
Okay.
world's top talent is doesn't show up anywhere and is sort of years in the making. And then all the stuff about the way they collect data in their self-driving vehicles,
Mm-hmm.
the strength of that. If this goes back to being the story, if that eventually becomes a subscription service and they take out a company like Uber because they have a built-in fleet of self-driving cars, that's a revolutionary kind of
Mm-hmm.
event for humanity.
Mm-hmm.
So that's the story. But of course, that is I would say years away. So in the short term, there's the negatives very much outweigh the positives.
Okay, let me comment on that. That's a great point. So what you're saying is, you said it's a couple years away. So my question to somebody who would say, "Well, this is a good time to buy," I'd say, "Why? What's the compelling reason for me to buy this stock today? The trend is down, right?
Yeah.
I agree with you. I mean, I agree with you. The FSD, he's talking about licensing it to other automakers. Um, they definitely have a moat there if they can get it to work. Okay, but what's the compelling reason that has to be done today to buy this stock?
Yeah, psychologically, it's probably known as bottom fishing, right? That you're
Mm-hmm.
trying to I mean, in a sense, assume that the price can't go lower, which is the mistake that investors make. I've made this mistake so many times. It's that kind of emotional feeling. Well, it's the anchoring bias, right? Because it was higher before and it's lower now. Lower now means cheap, and it's probably not going to go cheaper, which of course the market always loves proving you wrong when you think this way. So from your perspective, it seems like there is really zero reason to add shares at this moment.
I wouldn't until it tests that what is this price level that, well, 150. 150 happens to be the low of um, April of 2023. Until we test that low, 151.90, I wouldn't, because I think investors make it very complicated. Okay. If you look at the daily chart, which direction is price going? Down. Okay. So why don't you wait till it's not going down anymore and then buy?
Right. I think that's exactly right. And this goes to something else you say, which is you'd rather miss the call it first
Yep.
10% jump and be a little late, but have momentum and trend working in your favor than feel bad about yourself thinking, well, I wanted to buy, but I waited, and now it's more expensive. That's that I think in the long term is a psychological error that most people make, and it costs them money.
Yeah, I don't know why, and I've been guilty of this. I don't know why it's such a big deal that investors, it's so important to them to buy at the lowest low and sell at the highest high, when actually uh, data shows they do exactly the opposite. They right. And so if your thesis is right that you shared, okay, revolutionary company, they have a moat, they have a tremendous amount of value in their intellectual property, licensing. If you're right, this stock is going to move up greater than 10%, right?
Oh yeah, absolutely.
Yeah. So why wouldn't I wait till price reverses, starts moving up on whatever time frame somebody uses, okay? And maybe you do miss the first 5%, 10% of the move, but at the same time, you have a higher confidence level that the stock is now trending upwards. We've got to separate, and we've talked about this before. Just because a company has a good story doesn't mean it's a good stock. I'm not even saying Tesla's a bad company. I mean, I look forward to buying Tesla shares. I just believe that I'm going to be able to do it at a much cheaper price, because the market has a way of overextending, right? Price moves. When the market gets exuberant, it will overextend to the top side, and when the market gets negative on a stock, it will overextend to the downside. If we hit we break through that 150 level, okay. Um, I don't see, from what Tesla's saying, I don't see any macro or fundamental news that that I'm aware of that could be coming out that is going to be supportive of halting this downward move in the stock. And the other thing that I want to comment on is the tone around the stock has become decidedly negative. You have professionals, analysts, mutual fund managers now literally talking about Tesla like it's not a good company. I don't agree with that. But that's that
Yeah.
hyperbole that the market likes to put in.
Yeah, and as far as I could tell, there have been very few institutional buyers, which are the powers that be that actually make the stock move, and they're on the sidelines. So here's can I throw one more specific test case
Sure.
at you? Uh, I personally have a small core position right now in Tesla. It's 4% of my portfolio.
Mm-hmm.
So it's uh, from my perspective, it's sometimes I like, when I have confidence, I like making my positions up to 10.
Mm-hmm.
Uh, so for me, it's a relatively small position. Based on everything that we've said, knowing that I could get, say, close to 5% APY in a cash account,
Mm-hmm.
does it make sense for me to sell my position, say, down to 1% and wait until the trend changes? Or is this another instance where sitting on my hands, doing nothing, as is usually the case, is the better move? And it's ambivalent, right? I could
Yeah.
see a good bad. What do you think?
Well, as my namesake states, I don't give advice, but what I would do if it were me, okay, if you first of all, you have to decide what your outlook is for the next 6 to 9 months in this stock. Okay. Regardless of what that outlook is, I don't believe that anybody should own common stock without having protection, either through protective puts, or you can finance protective puts with a covered call, which is called a collar. It's not difficult to do, right? So at the
Right.
very least, I want to have some protection, because if the stock continues to move down and I've financed buying puts on it, um, I'm gonna benefit when the stock goes down. If it were me, I believe in the company. I know that I only own 4%, and then I'm willing to go up to 10%. I would hold my 4%, not add anything until I see a turn on the weekly chart, and then add. Is that dollar cost averaging? Yes, but it's dollar cost averaging driven by the trend of the stock price, not by I feel or I believe this is the low.
Yeah, that makes sense. That makes sense.
Because what you don't want to occur is, and Elon Musk is sort of known for this kind of stuff, is the out of the blue text or Twitter post where he announces some new revolutionary or evolutionary event for the company and the stock spikes. You want to have exposure, right, to Tesla, as you believe in it long term. My only point is, okay, it's gotten way cheaper over the last 8 months. I think it's going to get cheaper, and I have no idea what your basis is, but I'm looking at buying Tesla. I want to own Tesla, but I'm not going to buy it when the price is moving down. Let's let the price settle and reverse. Let's get it back in an uptrend,
And right, that's the key lesson, I think, because we used a lot of words again, boss. That's our habit. We use so many words, but I think in the condensed version, that's your main lesson, right? The trend is your friend. Let the price tell you what it's doing. As soon as the price begins to reverse, and here reversal for you would mean at the minimum the weekly chart.
Mm-hmm.
Then that's a stronger indicator than what your tummy is telling you in the moment of wanting to add shares. Does that sound fair?
Absolutely. Absolutely. Look, if you're going out to buy a car, okay, and most people do research, and the research is telling you that car prices are dropping, and you don't need to buy the car, you're not in that position, but are you going to wait, or are you going to say, no, I think this is the bottom, I'm going to go buy a car now? And yet most people will wait a month or two, but they don't do that with stocks. I mean, if the probability because of the direction of the stock is down, is high, why would you jump in right now? I understand why. I think there's, in addition to what you said, I think there's FOMO involved, right? I think people try to call the bottom and catch a falling knife because of FOMO. They fear that, oh my gosh, it could reverse and I could lose the chance of buying it at this level. So what? That's okay. So instead of buying it at 150, you buy it at 170. Who cares? If it's a good company and it's going to grow, and do what you think it's going to do, you're still going to make a lot of money. So, and I also think it has to do with, and this is a totally different conversation, but people look at investing the same way that they look at their jobs. You get paid in your job to be productive, to be active. That's not what you get paid to do in investing. But people think it is, that the more activity they do, the higher the probabilities they're going to make money. It's not. Investing is about waiting for the right time. So I do want to own Tesla, but I just saw a thing out of China where one of the Chinese manufacturers released a car that looks exactly like a Porsche, completely electric vehicle, selling it at $29,000. Okay. And I think they got something like 300,000 orders in the first 24 hours. That's coming to America. It's inevitable. Remember back in the day when Subaru came to America and they were considered the crap car? I mean, at least for me, and now look at Japanese manufacturers. They became the pinnacle of quality. I'm not saying China's going to do that, but I think the acceptance in the market, right?
I drove a yellow WRX Subaru. I named it the Stagecoach of Love.
Okay, but you were in the WRX. I mean, let's for those of you who don't know about Subarus, the WRX is what I call the Fast and the Furious model of Subarus, but it was still a Subaru.
Right. It was the saffron Stagecoach of Love.
Oh, saffron. Okay,
that's right.
Was that the actual color that Subaru put out? Saffron.
It was one of these rare limited editions. The car was normal in the sense that it was a WRX, but that color there was only however many made, and I happened to catch one of them.
Well, I used to drive to school in a Subaru Brat, with the
Oh,
with the seats that were going backwards in the back of, I guess the trunk space or whatever you would call it. It was like a Subaru mini pickup truck, and I remember that car. My parents owned a Subaru, and all I remember from it was it any bump you went over, you felt it. Everything, sort of rattled around in the car, And so I've never owned one, but I wasn't aware they offered saffron color, because that might have changed my opinion on Subarus.
Awesome. Hey, one very quick last thing that I just noticed, I think before we wrap up.
Mm-hmm.
I did this morning, I read a New York Times article about a new fund called Destiny Tech 100.
Okay.
Have you heard of this?
No, tell me about it.
So it's the ticker DXYZ. And this is a fund that is allowing investors to essentially partake in private investments that are only available to elite investors, including, I believe it's something like 35% SpaceX and Stripe as the big holdings. So I picked up this morning one share just to keep it on my radar. So 8:30 in the morning, I bought one share for $35. It is now it's up 95% in the first 2 hours of trading, and Robinhood just halted it.
Well, great. Now you're going to have our listeners turn into degenerates, because you're calling out stocks to go up 100% in an hour.
Right.
That's a cool concept. One of the things that makes me very interested actually is the investment in SpaceX.
Mm-hmm.
That's a big deal. I would love to buy into SpaceX. I'm not going to buy into SpaceX today because I'm going to be buying your shares at double the price of what you paid. And I just have a principle against that, Krzysztof. I don't want you selling me your shares. But I think that, I obviously, I look at it now, it doesn't have options. So immediately I'm like, but I think it's a great, did they just launch this?
No, it seems like I'm seeing the trading. It started trading on March 26th at $8.35.
Oh my gosh.
The only reason I bought it this morning, as I said, is because I read an article about it in the New York Times, and I definitely want SpaceX. So I thought, $30, keep it on the radar. But
was that the reason for the jump today? Was the New York Times article?
I have no idea, to be honest.
Or is it because they found out that Krzysztof was buying into it?
This is a great business model we have here, boss.
Yeah. So for our listeners, while not giving advice, I if it were me, I'd buy as much as I could of this fund at $100 after Krzysztof and I buy additional shares down here at 65. But no, I love the idea. Are they actually invested in SpaceX, or are they going to invest?
They are. I believe their model is that any private investors that want to sell their shares, these guys have made the connections that they buy those shares from the private investors and they hold them.
That's an interesting model. The who offered this? Is it like JP Morgan or any of those?
No idea, but interestingly for me, the group is located here in Austin. Oh. So I will send you the New York Times article so you could give it a more thorough look.
Yeah, I'll look at the article. I hope, because it's from the New York Times, it doesn't blow up my computer. But I'll look at the article. But I want to find out how the heck you got into it right before this nice 30-point jump. Because one of the things we want to teach our listeners that we don't really want to trade on inside information. So I don't know if.
Oh, correct. Oh, I see what you did there. I see what you did there.
Yeah.
All right, boss. Well,
all right, man.
I think that wraps her up for today.
Yeah. Thanks for coming on. A great discussion. And I want to, I really encourage people, if you really want to deep dive into some of this analysis, looking at companies, looking at owning stocks, even to the extent of timing on a general basis, looking at Krzysztof, Wall Street Wildlife, 7investing.com. Also, he's on Twitter. What's your Twitter handle again?
It's at the number 7 flying platypus.
Okay. I don't look, listeners. I do not advocate. I do it very rarely for other investors or traders. But look, if you want to dive deeper into this, both Krzysztof and his partner Luke are just excellent at this. So, and then you can always find me at MrNotAdvice.com. I run a Discord channel. We've got over 330 members, and we're constantly talking about stocks. It's a no degenerate zone. And so we don't YOLO, we don't FOMO, we don't share position sizes. And most importantly, we don't revel when somebody in the fact if somebody loses money. That's not what we're here for. So, and I'm also on Twitter at Mr. Not Advice. And finally, please, our email is podcast@mrnotadvice.com. If you have a topic or a question for a particular stock that you want us to look at, please send that in. That's podcast@mrnotadvice.com. And we'll endeavor to talk about live on the show the best ideas that are sent in to us.
Awesome. The one additional thing I'll say is that Mr. Not Advice's Discord is a very teacher-friendly, educational, learning-friendly space.
Thank you.
That's important. That's important because asking questions is how you learn. Making mistakes is how we learn even more. And having a space that feels protective of people's learning process is essential. And you're terrific at fostering that kind of comfort level. So
thank you.
If you're new, if you're starting out, check it out.
All right. Well, I hope you have a great weekend. And
all right, boss.
Thanks for, we'll see you next week.
All right.
All right.
Take care.
Bye.